All right, okay, good evening, everyone. So welcome to today's session. As usual, okay, we'll run through the markets over here, and we'll see if you guys also have any questions. Feel free to put it into the chat, and then we'll take it from there. Okay. So as I did mention as well, in terms of the new layout of the report, okay, I'll be walking through a very quick one. I think it's pretty straightforward in a way where it's self-explanatory, right? But I thought it's also good to just kind of like very quickly touch a little bit on it, so that you guys are familiar with it. Okay. So over here, what you see is basically today's report, right? So I kind of integrated the trade idea as well as potential trade setup into a single report, right? Previously we kind of break it down kind of separately, so I thought sometimes it's not as easy, right, to kind of rotate back into email and then look back into the chart and things like that. So that's where I did this, where we cover a little bit like what are some of the economic data to be aware of for the day, right? And then of course the instruments are still the same. Basically, we're covering the majors, some of the crosses as well as commodities and one index as well as the Bitcoin side of things, right? So slight navigation here to walk through. So you have like on the left, higher time frame analysis. What's the directional bias? What's the invalidation level? What's the target level? I think it's pretty straightforward, right? Directional bias here, we're referring to H4 primarily. So just to be clear, right? Because again, if you're looking at different time frames, the bias might be a little bit different. So we're always referring to H4 here when we're talking about higher time frame. The invalidation level basically just means that if price actually breaks that level, then the higher time frame analysis needs to be updated, right? So that's the name itself, invalidation level, which means as long as price respect that level, we are looking at basically still valid in terms of the overall analysis. The target level here refers to while we're bullish, where can we expect price to move towards, right? It doesn't mean that it's immediately a buy, right? Just bear that in mind because we are following that framework of DSC all the time, right? So direction is the first thing that we set. We still need to have the setup before we execute the trade. So this here, right? Just bear it in mind. This is just referring that the overall direction we're looking at, right? So on the right is where you look at the trade ideas, and that's kind of like sharing with you my thoughts, what I'm looking at. So in this case here, in this example, in euro dollar, you can see the trade idea here I put. We look to sell it for the short term towards 1.1615. Then we look to buy from there, right, with a target of 1.1775. Right, so in essence, what this means is basically I'm telling you, short term, potentially we can look to sell, and then once it hit a certain area, which is then our sell target in the short term, we can then flip that direction and start to look for buy, which then realigns back to the higher time frame, right? So of course, attached is the 4-hour chart. You can click on the link; it will help you expand a little bit. So you can, if you want the details of it, you can then take a look at that. Then at the bottom is where if there's a potential setup, I'll put this in, right? So euro dollar obviously doesn't have it, but if you go to the pound dollar, we do have one, which unfortunately, this setup is no longer valid because price continue to move lower before tagging our entry, which we're gonna classify this as a miss opportunity, and then we'll need to relook at it tomorrow, right? If conditions are still there, we might have a new setup to sell it maybe going into tomorrow. But just walk you through, what we have, right? Again, you click this, it'll bring you to the chart. We have the entry, stops, and targets over here. Okay. I think what's a little bit more interesting that I've added for clarity for everyone is basically the checklist, right? So I think for those of you who've been following, you are familiar with the setup I'm using to kind of execute trades. You might have an idea like what are some of the conditions and criteria required for the setup. What are some of the conditions and criteria that I'm a little bit more lenient in the event where we don't have it, it's fine. So I actually list it down here as well, right? Generally, we have the condition of liquidity sweep. market structure shift, which is you can call it break of structure, you can call it change of character. Then we have the FEG, which is fair value gap, and then the internal liquidity as well as corrective pullback, right? So I'm just gonna click into this and show you as an example. So you can see this is what we call a liquidity sweep, right? AKA kind of a fake breakout. Then the market pushed down, right? After making a push to the upside, fake break to the upside, it came down pretty impulsive, took out that low, right? So that's where your market structure shift, break of structure is. And this move itself leaves behind fair value gap, right? So that's where it is. So I think those are pretty straightforward. What would be a little bit more, I would say, might not be familiar with, right, for most of you, is internal liquidity as well as corrective pullback. Now, what I mean by that is, you can see that our entry is here, right? We do have a little bit of like some minor highs, even this minor highs here. This is what I classify as internal liquidity, which kind of also act as a part where if my entry is above, if I'm going to sell, right? If my entry is slightly above some of the minor highs within it, those highs can also serve as a potential liquidity area where market might fake break that, right? So that can add a little bit of pointers to it. And of course, corrective development, right, is essentially referring to a nature of how price is moving. And for those of you who are familiar with Elliott wave, we use that very often, right? Essentially, we do not want price to pull back too fast, right? We want price to kind of pull back kind of correctively. So that's the idea behind it, right? Yeah, so case in point, GBP USD, if you look at the chart today, this has actually moved down quite a bit, right? So we might need to readjust a little bit in terms of our entry for tomorrow, right? We'll see how price is going to develop from there. Okay, so yeah, I just want to walk you through this, right? And then I think the rest of it is just basically looking at other pairs, right? I got some feedback from you guys as well, right? Replying to the email, which is really appreciative of that. Telling me that you actually love this new format, right? Yeah, so great to know that, right? So we'll probably just continue this format as of now until maybe I find some other improvements, then we'll work on that as well, right, as we progress. Good. So just very quickly to you kind of touch upon that, right? So let's go back to the market updates moving forward from here, right? I'll touch on this part where, to me, October so far has been pretty slow. Now, for those of you who've been following a little bit on the trade ideas that I've shared, you probably experienced that as well, right? October is generally pretty slow so far. Not just in terms of the market moving. I think market is always moving, but it's more like the conditions for us to actually fulfill the trade setup that we're looking at, right? So yeah, I just want to be very open and telling you guys that personally I did not have a lot of trades as well, right? In October, I think there are like a couple of winning, couple of like trailing stops, couple of losses. So in terms of activity, there are, but in terms of like account growth, has been more or less stagnant, right? Which is kind of flat, right? Because you have some winnings with some losses. Kind of put it in a kind of neutral perspective for October so far. But we'll see. Another interesting point to note is that if you're not aware, let me bring this up. Okay, if you go over to the following week, okay, there are a couple of very important, not following, next week, right? In fact, there are a couple of very important news happening, like everything condensed into 1 week, right? Which is next week. If you take a look at that, Wednesday we have the Bank of Canada rate statement, and then we go into the FOMC, go into the Japan side of things, and then of course ECB, right? So you literally have like 1, 2, 3, 4, 4 banks, back to back for next week. Okay, so definitely that would put the market in some volatility, right? It will introduce volatility to the market because of these events next week. But also understand that building into the event, oftentimes the market will be a little bit slower as traders are essentially just anticipating, and waiting for the event, right? Yeah, so just bear that in mind, okay? When you are trading this 2 weeks, right? Next week will be pretty crazy. To be honest, when I see something like that, you know, back to back, one after another, I will be a little bit cautious. I mean, if there are setups, we'll probably still take it, but just bear in mind the risk adjustment that we might need to take note of. All right. So yeah, so let's start off with the analysis over here, right? So for euro dollar, price is currently already testing the key level. Okay. Ideally, I was looking at price coming down kind of correctively, and then we can push back up here where we have this nice little three-wave move, right? And this will also complete that three-wave move, and then potentially this can still go lower. But of course, right now it doesn't seem to be coming down correctively. It does seems to be coming down more like a V shape, right? So again, we'll really need to assess like after today, maybe going to tomorrow morning. What's the reaction of this 618, right? Okay, if what we're seeing right now gonna continue towards tomorrow morning, and we essentially see some sort of an inverted V, I would actually reassess this analysis here and conclude that this is all the pullback, right? It doesn't always need to go to 618. In fact, if I pull in the 50%, it did tag it just nice, right? If this comes down very, very strongly, continuing like this, in the momentum, then I would put it as on a bigger structure perspective. That would be your X, right? Because initially we were expecting X to be somewhere there, but this can be the case as well. Okay, so if that's going to be the case, then of course the overall direction here we look at is, of course, if this continue coming down like that, then we'll wait for a pullback. If we get that, then we'll look to sell, right? Then our invalidation level will be here, okay, and we'll be expecting short side. Right, so we'll see how the market is going to continue to develop for now, right? But this is currently how it is, right? Yeah, so then we have GBP as well, right? So you can see why I'm looking to sell it in the short term as of today, because we are kind of expecting that pullback, right? So GBP USD as of now seems to be pulling back a little bit more corrective as compared to the euro. Okay, you can see the momentum to the downside is a little bit slower, so that actually kind of bring us due towards this major perspective. And the key area right now that we can look out for is 1.3360, 1.3330 as a potential short-term sell target and potentially a buy area. Okay, and we can't expect again simple move like this, right? 1, 2, 3. Okay. Yeah, so that's the take on it. We might still be able to look for a sell going into tomorrow, but if market were to just tag this here, you know, before kind of pulling back, then I'll just be a little bit cautious in selling, but instead that I'll be looking to buy it, right? Because we have already tagged the buy area. Then, you know, instead of like looking to sell, we'll just shift towards looking to buy. All right, so that's on GBP USD. Aussie dollar right now, I would say we'll want to just wait for price to go into our key area, and then we'll look to sell it. Okay, instead of looking to buy, because I don't think this is something very interesting. There's no real clear setup on the lower time frame as well, so I'll just be patient and wait for price to come into this territory, and then we look for sell it. Okay, so if you kind of look at some of this major pairs here, right? Overall, we're still looking at generally bearish bias, just that individually they might have a slightly different structure. Okay, so those are the major pairs, and then we have the dollar Canadian. Dollar Canadian seems to be topping around this high here at 1.4080. We haven't really got a clear confirmation that the pullback retracement has started, right? We are anticipating this pullback after completing an inner 5-wave structure. We haven't really seen a clear impulsive drop, right? I mean, if the price can take out this low, that would kind of start indicating that the pullback is starting. Of course, some of the confirmation factor is if it comes down with momentum, that would be great, right? then we can look to sell it in the short term towards this area, okay, and then eventually flip it back up. So I'm just waiting for that confirmation from the market that the pullback has indeed started. Okay, now if this pullback is just going to be correctively like that without that impulsive break towards the low, right? I wouldn't be looking to sell, to be honest. If this is just going to be very, very corrective, then this zone here might be an area to look for the buy instead. Okay, because again, the FIPS, like 50% area, is there as a reference point that we're looking at, right? It serves kind of like an expectation, but it doesn't necessarily mean the market needs to go there, right? We always prioritize the price development first, right? Then we look at the FIPS and the key areas as a reference and extra layer of guidance, okay? So that's my take on dollar Canadian. Then we have dollar yen, right? So dollar yen, we're looking at a buy. We had a setup this morning as well, we can see here. But of course, price didn't really pull back. It just continued to push higher. We'll just reassess the setup. I think the overall direction now becomes very clear. This might have completed the pullback, right? So I've kind of put a label here on the larger degree structure. This would be our X, right? Now, bear in mind, can market still come back down like this before popping and then the X would just be shift here? Yes, very, very possible, right? But at this current price development, this looks obviously an impulsive leg now. So we are just, based on what we're seeing now, we are expecting more upside from here, right? And temporarily, we'll be looking at this is the swing low that has established itself. Okay. So from Elliott wave perspective, right, this is a little bit of opportunity to talk a little bit about it. We often would just look at it, okay, from a simple three-wave development, right? And if I kind of look at this here, okay, you can see the large degree, right? Oftentimes in Elliott wave, we kind of put in a very, very simple expectation of a three-wave development, right? WXY, you can see there. And then the concept itself works in a fractal of nature, which means you have a smaller degree, then you also have a larger degree, right? So in terms of the blue count, right, you can see the measurement of 1:1 would bring us towards 157.17 area. And of course, in the internal aspect of things, right? So you have the black count, which is the internal, and then you have the blue count, which is the external. So in the internal, okay, usually we'll also expect 1, 2, 3, right? So this is where the fit of the extension 0.618 comes in to provide us, again, some sort of a guidance where we can then expect an internal three-wave development that looks something like this, right? So again, that's what I've drawn out just now, right? Something like that. Bear in mind, this doesn't necessarily need to happen, but from Elliott wave perspective, this serves as part of a forecast, right? As part of an expectation. Give us some guidance to work with, right? So what this means is that, of course, when price eventually hit around that 154.20 area, we can expect a slightly deeper pullback, right, before potentially another push up. Now, we do not necessarily need to trade or we do not need to forecast so far into the future, but at least this here would serve as some sort of kind of a temporary short-term targets, right? In other words, if you're going to look to buy, if you have any potential buy trade setup, that would serve as perhaps a secondary take profit level, right? So that's what I would love to share with you guys, right? Since we have this opportunity, very, very clear structure to really talk about it as well. Okay, so the directional bias on dollar yen is quite clear. It's definitely bullish. It's just a matter of like, do we have the setup and opportunity to get involved in, right? Of course, price is still pushing up right now, so I think it's just too early to start kind of like putting in FIPS and measuring, right? We just need to wait for price to again decide to pull back a little bit, right? Which may or may not happen by tomorrow morning. But if the market starts to pull back, we might also still get some setup maybe on Thursday or Friday, right? So we really need to see how the market develops. Okay, don't want to rush things through as well. Then we have gold, right? Which is something that I would say a lot of traders has been really talking about this because it had hits all-time highs, break the 4K level, seems to be going towards 5K, or some of the banks, major banks, has even raised their targets to 6,000 by 22/6, right? Which to be honest is not too far off. But personally, I feel that we are bound for some sort of a deeper, more meaningful retracement, okay? Because this entire leg hasn't really seen any sort of a significant pullback, okay? Now in Elliott wave perspective, right, this is very, very obvious a strong leg to the upside. You can see that it's not new, right? I mean, that momentum has been there. You can see how gold likes to do that, right? Very, very huge extension, consolidate for a certain period of time, push it up, consolidate, push it up, consolidate, and then push it up again, right? Now, are we gonna go into some sort of a consolidation soon? Very likely. Okay. And we might miss some push to the upside because, again, I always say, when the market ends off as an impulse, we don't want to jump in. Okay. Now from a trading perspective, I would still strongly encourage to follow that philosophy, right? When the market just ends off either at the top or the bottom, it's not the best price to get involved in, even though it might extend its move, right? The reason is because from a risk structure perspective, it's just so difficult for you to structure a risk, right? Where are you going to put your stop? Your risk reward is just not going to be meaningful, right? But then traders will argue, oh, if what if it extends its move, right? Yeah, you forgo that potential profit to protect your downside, right? So again, depending on your key objective, are you risk first or are you reward first, right? Now, to me, my style is always protect the downside first, right? And that's the reason why I follow that kind of philosophy. So gold right now, to be honest, if you take a look at this here, the minimum expectation is here, right? Which I think very, very likely price would start to do this. Around this zone, to be very honest, is gonna provide an opportunity to see if we can look for more upside. But to be honest, I'm not surprised if this potentially just serve as a double top and this actually come down lower and take this, then only start going higher. Okay. The reason for that is because this has really extended quite a bit. Okay, and I'm again just mentally prepared that gold might go into a big consolidation phase or even quite a meaningful pullback before the continuation. Okay. Yeah, so just bear that in mind. But of course, I also have position in GLD, which is basically the gold ETF. And yes, that position itself is up like more than 100%, which is, great. Okay. But those are long-term position, right? So why I want to bring this up is because a single asset like gold, you need to be very clear. Are you trading gold? I mean, when you're participating in gold, are you trading it or are you looking for long-term potential, right? Because if you're trading it, essentially we are not looking to hold it for the long run. You probably don't want to go into CFD kind of position where you have like all-night fee. And if you're long-term investing in it, then picking the exact sweet spot to get in may not be the most important aspect, right? Because you're probably not going to leverage the position. You're going to go in one-to-one. And the only downside if you do that is really when that particular asset goes to zero, which is not likely going to happen. All right, and then from a long-term perspective, you can structure your position in terms of like averaging down, right? So again, when price goes lower, you can have like you structured your position in terms of you can re-enter and then average the entire entry point slightly lower so that eventually when the asset actually starts going higher, you start to recover and make more money from there. Right? So that's on gold. That's my take, right? Key levels there as well. Silver, okay, is actually another one that we have an opportunity to to really look at that. But you know, price didn't really pull into our entry point and it starts moving lower. Again, we'll relook at this setup tomorrow. But silver here is playing out pretty nicely as anticipated, right? We are still expecting some sort of a pullback towards this key level. Okay. So silver and gold, they move quite similarly. It's just the part where if you take a look at structure pattern, silver pullback seems to be a little bit more aggressive. So in terms of like looking to trade a pullback, I'm actually more interested in silver. Okay, so that's the take on it. Target wise, we're looking at 47.75, 46.20. If we got a sell, then that's something we can look into. All right. So again, simple wave expectation. We'll see this as an internal 3 wave, and if this pulls back, then this will be an external 1, 2, 3. Okay. So we'll see. Okay. Then we have crude oil. So crude oil over here, it has extended quite a bit to the downside as well. Right, if you take from this swing high, you can see that's a 3-wave development. This looks to be exhausting soon, which if you bring in certain oscillator momentum indicator, you see that divergence there anyway. Okay, so moving forward, we'll be expecting some sort of a pullback to the upside, which might open up a buy trade setup soon. But I would love to see some sort of a confirmation where price takes out this high with momentum, right? Then from a lower time frame, you can start to visualize. We have liquidity sweep, we have break of structure. If this goes with momentum, we have your fair value gap. This pullback would present the buy trade opportunity for us. Okay, so keeping this at watch for this week, we'll see how the market continue to develop. S&P pretty wild in terms of the volatility. You can see, right? That looks scary. If you still remember, that was the day that Donald Trump released a post about China. And then after that, he said, oh, we'll in open talks again, right? Then that's where the market recovers almost to where it first started, okay? So sometimes certain sentimental news like that, you don't want to take too much. I mean, you do not want to be overly impacted by one particular post, right? And you want to kind of like have a proper structure in terms of like what should you do, right, in the markets itself, and not just based on a simple post, okay, a single post, and then you go and make a decision. So if you ask me, equities market over direction, I'm still generally bullish on it. Okay, and I would generally just say that any pullback can still be seen as a buy opportunity, at least going into next year, right? The reason for that is because from a macro angle perspective, we're looking at the Fed cutting rates, right? We're still in the easing policy, okay? And for that reason, usually means more money is being introduced into the economy. Money supply increases. Generally, there will be money being used to, invest into equities and stock market, right? And then that kind of like supply and demand function, and prices of the equities are generally going to go up, right? So that's generally the logic of things. So from a macro perspective, I would still be bullish on this, and I think S&P can continue to hit all-time high, right? So I'm not too concerned over any sort of a pullback, as long as it's like, not another have like huge major shift in economy, or something that can prolong itself, right? To me, a post from Donald Trump is always seen as a sentiment move in the market, right? It's nothing really fundamental, and you need to also understand his character. He's a little bit hot-headed, right? Meaning, when he thinks of something, he would just post it up, right? Without really thinking of the consequences, and then he can switch, right, from one to another, kind of like literally overnight, okay? So just don't take everything too seriously too soon, right? Unless the whole thing kind of drag out, then you might want to be a little bit concerned and take note of it, okay? Then next up, we have a couple of yen pairs over here, like the pound yen and odd yen. I think these two are very, very similar to the dollar yen, right? Very, very similar to dollar yen. So we are kind of both bullish on this, and we're essentially just gonna wait for the setup to go long, okay, on the yen pairs itself. Speaking of the yen pairs, just want to also kind of cover this a little bit in case some of you are not aware of the fundamental process of the Japanese yen, right? So obviously they're gonna have an election soon. And the speculated part of it is that the female candidate might be elected, as a president. As of now, is like the favorites. And the policy that she is kind of like leaning towards are very, very similar to the previous prime minister in Japan, right? The Abenomics. And then previously, there's this saying of helicopter money, right? Which is essentially where Japan just literally keep printing. Okay, and that's where we saw the yen weaken a lot, right? So there's also that concern right now from the markets, right? If she wins and she really roll out the policy, would the yen actually weakens, right? And obviously there are some movement we're starting to see as of like last week already or earlier the month, right? You can see this gap is essentially from that speculation itself. Okay. So yeah, so for those of you not aware, the market actually moved quite, impulsively at the start of this month is really because of that sentiment, right? Because from that particular speculation. Okay. So yeah, yen pairs, we're still looking at bullish buys as of now, at least from a technical point of view as well, right? So we'll see if we can get any buy trade set up moving forward. Then we have the pound odd, right? Pound odd here, what we're looking at is we do have this as a crawl structure. Okay, this is pretty impulsive, and then we end off with a little bit of a crawl. So from Elliott wave perspective, right, this would be what I would put in as a leading diagonal, right? The part here, why I'm looking at this as a leading diagonal, instead of some sort of an ending diagonal, right? So what's the difference? The structure and the visual look of the leading diagonal and ending diagonal, they're very, very similar. The difference is the context of the pattern itself, right? You can see that previously the market has been coming down, and then we see our first diagonal pattern as a part of a reversal. So oftentimes this would seen as a leading, right? And we kind of then expect, all right, the pullback is here. And then we expect minimum one more push, right? So even if this is a leading, doesn't mean that the market will always go higher. It can simply mean this is a bigger A wave, B wave, and then of course here is a C wave, and then this can still come back down, right? But again, we are not too concerned over, too far into the future. We're essentially just looking at, all right, if that's going to be leading, right, this can be our A wave. If this pulls back correctively, we can still trade the C wave up, right? So that's the idea behind it. Hey, would we be potentially looking at a sell? The answer is yes, right? I mean, if because price haven't really tagged it, right? So if from here price starts to pull back a little bit first, we can still look for a short-term sell towards our key area, okay? But of course, we want to see the setup being established first, right? So over here, what I'm looking at is on the 4-hour time frame, we do have a little bit of a fair value gap here. But on the lower time frame, we don't really have that, right? Even on hourly or the 30 minutes, we don't really have that. Okay, which is not something overly concerned. If let's say price were to still pull back correctively, okay, potentially we can still look to trade it using the FIPS, right? Somewhere around there, that will be the area. Okay, right. We can still look to kind of trade this. But of course, in terms of the checklist, it wouldn't be a perfect one, right? Because we are kind of lacking that value gap there. But I think from where we are right now to our potential entry as a setup here, there's still some distance, right? So I'm not too in a rush to get in terms of putting the limit order, because ideally, if this is just gonna go correctively, that would increase the odds of the sell side as well, because then this would give us our corrective nature of the pullback. Okay, so I'm just kind of waiting on that as well, right? So another opportunity that we can pay attention within the week. Then we have Bitcoin. So Bitcoin here, definitely the volatility is there. Overall, I'm still bullish on things, at least for the long term. Okay. I did have a buy here. So again, I kind of shared, this is not going to be a position where I'm going to leverage on. It's going to be a cash position on the actual coin. It's not going to be CFD as well. So kind of like back to break even, right? Where we entered, price is just basically trading around there. Yeah, if you're looking to trade, at least for the short term, I think right now we don't have a very clear structure. You probably want to be patient and let the market develop into something clearer in terms of the pattern before we can't establish, okay, in terms of trading, like, do we want to look to buy or sell, right? But if you're looking at long term, take it as small portion of the portfolio if you're interested in building up a crypto side of things. Then I feel that right now is a good price point to be adding our first layer, right? Again, in terms of long term, in terms of like looking at it as kind of like quote unquote an investment itself, okay? Yeah, so those are the things that I'm looking at for the week, right? I do see some requests on different pairings here. First we have Veneer, if I pronounce the name correctly, asking about the Euro Yen, Dollar Franc, as well as Aussie Dollar. So we did cover Aussie Dollar already. So let me, go over to the Euro Yen. Right. So Euro Yen, to be very, very honest, all the yen pairs are generally gonna look the same. Okay. You can see this as an impulsive leg. So we are definitely expecting more upside. Right, we're definitely expecting more upside. This would definitely still serve as an invalidation level. Structurally, to be honest, Euro Yen may not be the cleanest compared to Dollar Yen as well as the Pound Yen. I think those two are a little bit, structure wise, a little bit cleaner. But overall direction is generally going to be the same, right? So, when we cover on the other yen pairs, Euro Yen is likely just going to be the similar direction. Okay. Then we have Dollar Franc. Let me just clean up this. This was done quite some time back. Came down to that area. I would say you would probably want to look out for the upside potential. Okay. Basically, price is reacting off that 618. If I kind of labeled it right, I would put it like this. Okay, where we have this tree wave, this is basically a pullback. Your invalidation level would still be there. Okay. If we can get a little bit more upside here and then starts to do that corrective pullback on the smaller time frame, that would open up the buy side, right? And then the simple projection we can have right now is to look out for something like this first, right? Which would then build in as a bigger degree tree wave development. Okay, so that's my take on the dollar franc, right? But of course, you want to then go down to a lower time frame and see if you can get some sort of a buy trade setup, okay, to get involved in it, right? But directional wise, that's gonna be the focus. Okay, then I see Irene here ask for the pound cat, right? Pound cat here is, I mean, I do at times look at Eurocat, right? Again, these two are pretty similar. I would say pound cat right now. Okay, you would probably want to focus on downside because I'm seeing this as a potential 1, 2, 3, 4, 5. Okay. Whether this is a 5-wave move, okay, or a bigger kind of like structure degree itself. Generally, this entire leg looks very, very corrective. Okay, this entirely. So if this is indeed the final top, right, the downside can be pretty significant. Obviously, we won't straight away target all the way down there. The first target obviously is going to be somewhere here, right, which is where that trend line is. Okay. So again, if I zoom back in, right, we have that initial sign that price is telling us with this momentum push. Okay. Now, I don't trade the Euro cat, I don't trade the pound cat, so I don't look at it frequently on a day-to-day basis. But based on today here, if we can start to see some sort of a corrective pullback, we can minimum expect it to come down towards the zone, right? If it clears off that zone, it really opens up that downside opportunity, right? So if I drop down to the lower time frame here, we might have that setup building as well, right? So on a H1, we can clearly see this is some sort of a big break, right? And of course, this move to the downside has cleared off some of the lows, so the market shift is there. On the H1, we do have this as a feather gap, right? 30-minute time frame, we don't really see it there, but the H1 is there, right? So again, if this starts to do some sort of a corrective pullback, it may not go so deep, right? If you're gonna shift it a little bit, this is the area that you can also look out for an opportunity to sell, right? Yeah, so I would say there are something interesting happening in the pound cat, right? From a higher time frame perspective, as well as potentially a setup that you can look out for in the smaller time frame structure. Okay. Euro cat kind of presents a little bit similarity on that as well, right? Initially, you can see this is the projection. Price went up and then came back down. It's a kind of V shape, right? So again, if you look at it on the bigger scheme of things, the entire structure is still basically there, right? In terms of like, yeah, it's going up, but on the bigger structure perspective, it opens up the possibility where when the pullback starts, right? There are a couple of these areas that you might look for potential take profits. Okay, and we are seeing this very, very impulsive drop, right? So would this be an early sign that this entire structure to the upside has eventually completed? Probably, right? Because if you take a look at the momentum to the downside, okay, this 1-2 candle here and then this current candle here, if you look at it historically, is one of the bigger ones. In terms of momentum, it's one of the bigger ones as you compare to this move, or this move, right? This one here has a little bit of big candles, but then these are all very, very small. This one doesn't really count because of a very, very overlapping move. This one has a huge candle here, but then after that, the follow up isn't there, right? But you can see here, this is huge. This current candle hasn't closed, but so far it seems huge, right? So in terms of momentum wise, this seems to be the strongest as of now based on the recent pullback, right? So that kind of also gives me a hint, give me a little bit of hint that maybe the structure has completed and right now we're seeing some sort of a pullback, right? Yeah, so you definitely need to keep an eye on this moving forward if you're kind of looking to trade the pairs on, pound cat or euro cat, right? Yeah, but from what we're looking at it today, that will be my take. Cool. Right. So yeah, generally that's things I have for all of you here today. Okay, so we're gonna see how the market continue to develop. As usual, we'll keep you guys updated on a regular basis as well. So let's see. All the best for this week. Okay, and I'll see you guys again next week, right? Yeah, so just heads up, we'll be structuring our weekly session because like last month or last 2 months ago, we have been doing Mondays, but I think moving into Tuesday will be a little bit better time for me. So yeah, moving forward, we'll kind of like keep our weekly session here on Tuesday, for now, right? So we're gonna keep it like regularly, on Tuesdays itself. Okay, good. So with that, I'll see you guys next week, Tuesday. All right, all the best. We'll see how the market develops. Good night.